Coming up on Business Incorporated, Nigeria's inflation rate rises to a 17-year high at 21.91%. And Kenya attracts 145 billion shillings worth of mergers and acquisitions in 2022. Zimbabwe has launched a new data portal marking the implementation of a key recommendation of the International Monetary Fund. Hello and welcome to the program. I'm Ladi Williams. First off, let's look at how your money is performing at intraday on the African continent. We see it's mostly negative sentiment we see on the African continent there with the NGX. That's down marginally there, 0.05% is what we have. We've had a negative close for Monday and Tuesday. Hopefully we can get a turn today. And the South Africa GSE down big, massive 2.23%, 73,334 points. That's farther away from the 80,000 level. Egypt, that's also down 1.61%. And we see Kenya closing negative again, down 1.11%. We see an analyst I spoke to yesterday did talk about the Kenyan shilling weighing on the market there, talking about the Kenya market. As we're seeing that negative trend in that market. Moving on to the Middle East now. We see it's also negative sentiment, but squarely mixed in the Middle East. Abu Dhabi, that's down 0.35%. See right behind me there. But the Dubai index, mixed sentiment in the UAE. Dubai up 0.52%. Other markets we track, Saudi Arabia, Qatari index is also mixed there. And we see it's the Qatari index down 1% at intraday. All right, let's talk to Juliana now. We have Juliana right there in the UK. Great to have you, Juliana. So it's a budget day today right there in the UK. What sound bites are you getting about Jeremy Hunt's spring budget?
Good afternoon, Laddie. Well, the Chancellor, Jeremy Hunt, has literally just stood up a couple of seconds ago to deliver his second major fiscal statement since becoming Chancellor. Of course, if we cast our minds back to after the Liz Truss economics meltdown, he had to deliver that autumn statement to calm the markets, which he pretty much did. But now we've got this spring budget, which is going to be much more jam-packed, something that, you know, most people in the country don't really listen to politics. But when it comes to a budget such as this one, everybody from beleaguered households, small businesses, big corporations are all going to be glued to the television to try and find out exactly how we're going to get ourselves out of this economic mess. And let's just have a look at this economic mess, because we are under a pretty serious cost of living crisis. One of the reasons why I'm speaking to you from home today is because we have a series of coordinated strikes. You know, the winter of discontent that started pretty much in the summer last year has continued on. And today, tens of thousands of schools across the country have been shut. TfL, the RMT union, as well as others, have shut down the British transport network. So you can't get a train into central London over the next 48 hours. And today is the last day of the 3-day walkout by junior doctors, who make up 40% of the NHS. So that's the backdrop that the Chancellor is standing up against. And as to be expected, the Conservative government have kind of leaked parts of the budget to Conservative-friendly media. And I suppose there were kind of three big ones. The first is this £4 billion that's going to be put aside from the Treasury to help with childcare, which isn't necessarily something we were expecting. But if you take a look at the fact that there are over 6 million working-aged adults in the UK who are currently economically inactive, that is something that Jeremy Hunt really wants to focus on. And, you know, as a mother of 3 children, I know the cost of childcare. It is incredibly expensive. You're talking about over 1 million naira a month per child. And this is not for the bougie and the middle class, laddie. This is for everybody. You know, if anybody wants to put their children into nursery whilst you're at work, it is going to cost you a lot of money. And I believe there are about 2 million working adults who are staying at home because simply they just cannot afford to go to work because of those childcare costs. So I think it's a strategic decision from the government to pump this money into offering free childcare. I believe it's going to be about 30 hours a week for children aged 1 to 3. Another one, which is quite controversial and certainly something that the global markets will be looking at, is this corporation tax. And now we know it was when the Prime Minister, Rishi Sunak, was the Chancellor, that he announced it would be rising by 6 percentage points from about 9 to 25%. Is that going to go ahead? We think that is going to be going ahead today. May cause some concern, particularly amongst some backbench Tory MPs, because, of course, they want to attract investment into the UK. If corporation tax is too high, they just go elsewhere. And then another big one, which lots of people are going to be focusing on, is this energy price cap, which has been one of the reasons why we are going through a severe cost of living crisis. People really struggling to heat their homes, put food on the table because of this ongoing war just a stone's throw away from us. We're expecting that the energy price cap, which has been capped at £2,500 a month, will be maintained to the next quarter, so to the end of July. Again, it's 12:38 local. The Chancellor just got on his feet a couple of minutes ago, so I don't have the full details. But in terms of what had already been leaked, those are some of the big ones.
Well, I guess we'll be looking out for the speech there. But definitely tell me about it. It's really expensive now, childcare. Globally, that it's gone up so much. But how are the markets reacting to the budget at this time?
Yeah, I don't have live market numbers, but from what I've seen previously, the bloodbath, shall we call it? I'm using one of your words, laddie.
Right.
The fallout from the Silicon Valley banking crisis continues. I think there were rumours as well yesterday night from some pretty senior economists saying that there are some concerns about Credit Suisse. So even though there was a bailout by US President Joe Biden, and of course the Bank of England and the Treasury intervened to make sure HSBC took over SVB subsidiary here in the UK, we're still not out of the woods yet. Are banks as resilient as we hope? And I think that's why European banks, British banks are all leading the fallers on the FTSE. In fact, the FTSE has lost all of its gains. All of the gains that it earned earlier this year have completely gone. The all share at intraday is down by 2.04%. FTSE 100 is down by 2.32%. And the FTSE 250, the domestic market, that's down by 2.41%. These are major losses. On the currencies market, the British pound is currently trading down against the US dollar by 0.69%, although it's trading up against the euro by 0.46%, but trading majorly down against the Japanese yen at intraday by 1.22%.
Yeah, definitely a confusing time for investors globally. The volatility is insane right now. Thank you so much, Juliana, for the details there.
Thank you.
All right, now let's move on to other markets now. We see and the U.S. stock futures under pressure today as the financial sector increased the shares of Credit Suisse, a Swiss bank with large U.S. and global operations. They're tumbling more than 20%. That's the shares of Credit Suisse. We see that's what's driving sentiment in the market right now. But the stock futures there are still in the green. Be interesting to see how the market opens up later. But let's get a summary of yesterday's close from our correspondent, Marie Bird.
The stock market rallied on Tuesday as the Dow Jones increased by 1.06%. The S&P 500 increased by 1.65%. And the heavy-tech NASDAQ was up by 2.14%. Many investors were hopeful in the president's message that he would ensure that those depositors in Silicon Valley Bank and Signature Bank would receive their funds and that the FDIC would ensure the deposit up to $250,000. This has also put some great hope into investors as they're looking for the weeks and months ahead in the U.S. economy.
That was Mary Baird there giving us the details for yesterday's close and for the U.S. markets. Definitely be looking out for today's close with all the negative sentiment we're seeing in the market right now. But right here in Nigeria, next weekend, gonna be electing a new governor in most of the states in Nigeria. And as the governorship elections draw near, we'll be getting economic plans from major governorship candidates on our business shows. Today, we're going to hear from Mr. Gbadebo Rhodes of Viva, the Labour Party governorship candidate. And tomorrow we'll have other contenders for the positions. Do take a listen.
The first thing is going to ensure that Lagos State becomes number one in relation to ease of doing business in Nigeria. Our focus will be to take away all the bottlenecks and bureaucracies, all your permits, all your documentation, your COOs, planning permission. We're going to ensure that we use as much technology as possible so you don't have to come to Alausa to get your documentation and have bottlenecks impeding you and your business from growing. We're going to focus on opening up our government transparently to build trust with commercial and the business community so that we'll create an enabling environment for businesses to come in and allow us to achieve growth in terms of infrastructure development and a number of other things. The idea for us is that the development of Lagos State should not be limited to the purse strings of Lagos State. We're going to work with the business community to ensure that, because they do these things efficiently, they're able to do it at minimum cost, and we're going to work with them to ensure that we can develop Lagos together. We're going to have a statewide transportation network. The more business can move, the faster business and commodities can move, and with less hassle, commodities become cheaper and become more accessible, and businesses can thrive. So that is also extremely important, and we're going to be achieving this with our statewide transportation system that we want to achieve 100 kilometers over 4 years, and then 160 kilometers by the 8th year. We're also going to dredge our waterways properly so people can move with industrial type ferries all across Lagos State and decentralize the planning of Lagos, opening up Lagos East and Lagos West. In that way, we can have a lot more business opportunities all across Lagos as opposed to centralized and efficient situation that currently exists. We're also going to push judicial reform, work with judiciary to ensure that businesses can get justice as soon as possible by creating special courts to sit on economic matters. We're also going to focus on safety by transforming the agri-roads on the streets to become more productive members of society. The cost of our logistics, the cost that we then put on our goods will reduce. We have a situation where on the way to the market, goods are stopped and they have to pay 4 or 5 times on the same road. Same thing going out. All these things will be a thing on the past with our government. We're also going to ensure that we pay a living wage, not a minimum wage. The moment people start to have more disposable income, the more likely it is for businesses to thrive in Lagos State. Don't be a situation where the business will start today and by the next year it has gone out of business because people don't have disposable income. So
that was Labour Party governorship candidate there, Gbadebo Rhodes, Viva. Do remember, tomorrow, Business Morning, we'll hear from other governorship candidates. And remember to go out there and vote for your preferred candidate when the elections start over the weekend. All right, we'll take a break now. When we come back, we'll discuss other matters on the African continent. Do stay with us. Welcome back. As talks continue to extend a deal to allow grain shipments from Ukraine's Black Sea ports ahead of a deadline later this week, what does this mean for food security in Africa if the deal happens or doesn't happen? Well, joining us now is Ted George, founder, Cleo's Advisory. Great to have you, Ted. It's been a while.
It has. Good to be back.
So we got that news about the U.S. drone collision over the Black Sea, and now obviously it's all about talks about extension and renewal of this grain deal. What does this mean for Africa at this time?
Well, I mean, it's still unsure if the deal has been agreed. There's been a sort of a rolling 120-day deal, which enables Ukraine to export grain from the country, and it's guaranteed by the UN and Turkey, which is acting as a broker. But it's really unclear if this deal has been extended. It was due to run out on Saturday. They wanted a 120-day extension. Russia has indicated 60 days. So it does look like it is going ahead, and certainly prices are coming down at the moment. But if the deal were not to be renewed, then there's a real concern that would really drive up prices, and that would affect markets all across the world, especially in Africa.
And from what you're seeing now, Ted, at this point, from your point of view, do you see this deal actually being renewed?
Well, I think it's very likely it would be renewed. This is one of the areas where Russia has positive leverage in the world, which is enabling the flows of food. We've seen many African countries getting severely affected by the high food prices and also by the breaking of the flows of Ukrainian wheat to these regions. So it's everything in Russia's interest to renew this deal because that is good for the allies that it has in Africa. But it's very clear that Russia is also pushing for concessions. It wants to be able to start exporting fertilizer again, and it wants other inputs to import for the agricultural sector. So it's certainly playing hardball here. But I think certainly for another 60 days, it looks likely this deal will be extended.
All right, we'll keep watching out for that. But what do you think Africa can or should be doing, at this time to reduce reliance on this deal?
Well, we've seen already. I mean, once after the Russian invasion last year, there was the collapse in exports from Ukraine. We saw all of the countries in the world scrambling for alternative supplies. Now, prices shot up, but they've since come down to where they were before the Russian invasion. So the thing is, alternative supplies have been found from other wheat-producing regions. But the case really, which is difficult for Africa, is countries that are very dependent on imports of things like wheat, maize, and rice, where they can't grow them themselves. Nigeria is a case in point. It imports millions of tons of wheat every year. So really the issue here is, number one, substitutes. It's just really, can there be local substitutes which are produced, which can feed the population? It's drawing on all the things like yams, cassava, but all the other things that you can do with them as well to create foods to substitute wheat so you're not so dependent if you can't actually grow it in a tropical climate.
All right, but how important are smallholder farmers to African and global food security, with all that's happening with the Black Sea?
Well, I mean, they are absolutely critical, and they are the bedrock of the agricultural economy. Remember, a lot of rural communities are almost self-feeding in the sense of the amount of food flows around there before it's exported out to the cities or exported internationally. So they're the bedrock of the economy. They need proper supporting. They are critical when it comes to locals' food supplies as well. But of course, they can be critical in helping substitution and moving away from costly imports towards more locally produced foods. I mean, just take cassava. Cassava grows anywhere in Nigeria. Practically, it doesn't even need necessarily cultivating. It's all about using those resources which are well suited to Africa, and a lot of that is going to come from the smallholder sector.
All right, Ted, we'll keep watching out for a renewal of that deal and a possible end to the war. Thank you so much, Ted George, founder, Cleo's Advisory, UK.
My pleasure.
All right, now let's head to Europe. Now, see, the collapse of Silicon Valley Bank has caused anxiety over in Europe, and the problems in the US could spread to European banking sector. We're just seeing Credit Suisse impact right now. But let's talk to Rob Watts right there. Rob, is there a fear that European banks could also be at risk from a collapse?
That was certainly the immediate fear at the start of the week after developments in the US with SVB and Signature Bank over the weekend. And that's why leaders here were very quick to try to reassure citizens and markets that their banks were robust and that savers' money was safe. We heard from the British Finance Minister on Monday morning and also from France's President Emmanuel Macron. Clearly, though, they couldn't say anything other than that the banks were safe. So since then, there's been a lot of digging to work out how secure Europe's banks actually are. Chancellor Olaf Scholz here in Germany has now joined those other leaders in urging savers not to be concerned. And we've also heard from the rating agencies Moody's and S&P Global. They appear to have backed that up. They've said that the impact of Silicon Valley Bank's collapse should be limited here in Europe because of fundamental differences in how Europe's banks are organised. For example, European banks tend to place a larger share of their deposits with central banks than American banks do. Also, debt securities make up a smaller part of bank balance sheets here. The ratings agencies also say that the Bank of England and the European central banks, are the big central banks here in Europe, have developed good access to liquidity in the event of a crisis for banks, a lack of which proved to be Silicon Valley Bank's downfall. However, the interest rates situation here is continuing to tighten, and so European banks are facing their own pressures still.
That's Rob Watts right there in Berlin. Now, bringing it home now, I'll see Nigeria's inflation rate for February. That's out today. We'll see it hit 21.91% in February compared to 21.82% in January. That's according to the National Bureau of Statistics, which announced that today. The office said the February 2023 inflation showed an increase of 0.09% percentage points when compared to January 2023 headline inflation rate. And analysis shows that there were a total of 123 M&A deals, mergers and acquisitions in Kenya last year, the highest number of transactions in the Eastern Africa region. Kenya was, however, second in the region in terms of deal and value, with analysis showing that Sudan booked $1.4 billion from just 3 transactions last year. Kenya last year recorded several top-ranking mergers and acquisitions, including KCB Group's acquisition of an 85% stake in Trust Merchant Bank of the Democratic Republic of Congo, in a deal advised by Deloitte. And Zimbabwe has launched a new data portal marking the implementation of a key recommendation of the International Monetary Fund to enhance general data dissemination systems to publish essential macroeconomic and financial data. The EGDDS is the first tier of the IMF data standards initiatives that promotes transparency as a global public good and encourages countries to voluntarily publish timely data that is essential for monitoring and analyzing economic performance. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ladi Williams. Bye for now.